The secret which has led me to my profitability has been market structure. Okay. I trade a certain strategy surrounding, scalping the NASDAQ futures or the ES. One of the markets that I prefer to trade. Okay. And I like trading gold as well. But the secret to it all is going to be market structure. Okay. All right. The strategy is, that's the last component in a sense. All right. So people always think that they have to have a strategy to make it big in trading, whatever market they tend to trade, whether it's futures or options or Forex. That is true, part of it. But the biggest part of what you need to understand is being able to read the charts, meaning understanding the flow of the market. Is it making higher highs and higher lows, or is it making lower lows and lower highs? And you have to understand when the market is shifting or trending from one direction and then moving to another direction. Okay. So to all my beginner traders out there, and to all also my novice traders out there just as well, who, let's say, even if you are making money, I'm going to just show you what it is that I have to understand and see when it comes to trading. And maybe you are actually, not understanding fully when it comes to market structure. I said it as a whole, okay? So if you're struggling with this term, please watch the video from its entirety from beginning to end. This may help you out when it comes to actual structure. You need to understand where is your leg that stands at. Where is the major high or the major low that the market just created. And you want to wait patiently to see, is it going to break either, one of those extremes. If you're struggling trading in the in-between, okay, meaning if we have a major low here and this is our major high, and the market is kind of moving sideways, and we haven't broken this high or this low, then just wait, okay? Do not put your capital on the line and take it on additional or major risk. Yes, you're going to have to wait it out and be patient, and that is the biggest thing. Sometimes the trade may not happen within a day, but when it does happen, when you take out this high or take out this low, if you cannot catch a trade or don't, you struggle trading within a range, wait for the bigger move to take place. I've said this, I don't know how many times. People get chopped up and they get, they start losing money in between the noise of what's going on, all right? Especially when you start moving down to a lower base chart, start scaling down. That's what people are really making their mistakes at. Look at your higher base chart first. So for example, with the ES futures, I'm looking at a 60 range chart. That's my higher base chart. I trade directly from the 12 range chart. And I trade a simple strategy, which involves zone within a zone concept, looking for confluence. Why do I do that? Why do I scale down at the market up a higher base zone? So let's say I'm interested in trading this zone right here, which was a viable and valid demand zone resting right here. And then I move down to my lower base chart. So I'll mark this zone up on my 60 range. Then I'll move down to my 12 range to look for a smaller demand zone resting on the inside of here. Why? Because look, if I get into the trade on the rejection off this candle right here after it closes, so this is, the market comes here, starts to reject at 55.92, starts to move up. By the time that candle closes, we're at 56.07, right? Okay, so the market has already moved several points to the upside, and you can bet your bottom dollar that it may pull back 10 points before it continues moving in your direction. Okay, so this is the purpose of the reason why I like to move down to find a more precise entry point on the zone on a smaller base chart on my 12 range chart on the inside of the 60 range chart to eliminate all the chop, to eliminate, all the drawdown that I could possibly take on. Because if I get into the candle close here, once this candle closes bullish back to the upside, the market could pull back, okay? And maybe I don't have the capital to weather the storm of 5 points loss or 10 points loss. I'm looking forward to just keep, moving to the upside. That's not the way the market moves. It is going to push up and then pull back, and then push up and then pull back, or push lower and then pull back. That's how it moves. You have to understand that. So by the time you get into a trade right here, the market again may have pulled back several points before it moves in your direction. But what I'm trying to get you to explain here is this right here. If we are moving bearishly to the downside, right? Look at where the last stop is before the market makes its, move, okay? So if this is a low, lower high, and a lower low, and this is my most recent low, and then we start moving to the upside, okay? And we break structure above this area. So now I have what? I have a low here, a major low, and a major high right here. So I would naturally be looking for a pullback to like right here, okay? To right here, this demand zone right here. I'm gonna mark it up. All right. This is a valid demand zone because this is where aggressive buying took place that aided in this breaker structure above this high right here, right? So I can get to this trade right here and take it up comfortably to right here, the bottom end of that bullish candle right there. So let's go ahead and mark that up right now. Arrow line right here. I would have taken a trade up to here. So if you got into this trade, I'm not saying off of the 60 range chart directly, but I'm just showing you this will be my first markup on my 60 range chart. My demand zone where we took out structure. Now we have a major low, major high, taking structure out. The market may come in between here. And then in the meantime, figure out and wait for either two things, either for it to break structure here or break structure back to the upside. If you do not understand what to do, if you are, when the market starts kind of moving sideways. Now this is a no-brainer here because the fact is we broke above this high right here. So because we broke structure, just look for a pullback to a key area of demand. And I talk about this in many videos just as well. Yes, there could be a few demand zones on the push to the upside right here, but which one makes more sense on a leg? The middle portion, okay, the 50%, or back down here around the 60, I'm just gonna pull a fib right quick. I don't normally do this, but I just want to show you. Fib retracement back up to here. I don't trade fib retracements, but 61, anything below the 50%, because you don't want to be trading in the halfway point in the middle of a leg pretty much, okay? Now, I'm not saying that the market may not reject somewhere up in here and continue pushing the upside. They're going to do what they want to do. We do not control the markets. I do not have a crystal ball 100% to let me know exactly when to get in trade. Trading is all about probability and understanding structural breaks. That's the number one thing. What is the market structure doing, or the structure of, what's it showing you, okay? So when it comes back to here, let's say we have a demand zone resting right here, right? Okay, at the 50% area. Would I take that trade if we get the rejection? Sure, I would. Okay, but I also need to keep it in the back of my mind that if there are gaps resting below at another area of demand, that it could be for a quick scalp, because I know the market could come down here and test the lower portion of the leg where the buy-in took place originally at. Okay, so this makes more sense. This makes more sense. So if I get into the trade somewhere in this area right here, I can take it back up comfortably, back up to 56.11, okay, and pick myself up several points, at least 10 points on the ES. 5 points on the ES is a very, very good trade setup, okay? So let's continue on here. Let me, what did I do there? 1 second. This is how anyone can go about, let's say you have a goal making $500 on a day, or making $2,000 a week. You can do this, okay? You think about it. $2,000 is nothing more but $400 5 days a week. So you trade 5 days and you make $400, and that's pretty easy to make on the ES or even on the NASDAQ, okay? Now, trading the micros, yes, it could be a little bit more, may have to take a few more trades or bump it up and start trading more contracts with micros, okay? But the thing about trading the micros is that you're not leveraging the whole as much as you would if you're trading the full-on E-minis. I'll say that now. Now, yes, it's fairly easy to get $400 a day trading the E-minis, even with one contract on the NASDAQ, or one contract trading the ES, but you have to hold the ES for a little longer. But what I'm trying to show you is that you've got to master this concept of trading and understanding market structure, okay? Again, if we look at structure, it's going to show you, you got to run to the downside. It makes a lower high. Oops, sorry about that. Give me 1 second, okay? Lower high, and then we got this lower low that's created. That's my major low. When it comes back up and breaks structure, think about it like this. Anytime the market breaks structure above a high, okay, all right, and this is a nice swing to the upside here, and it comes down and breaks above that high, then we got a structure break. Then look for the market, wait patiently for the market to come down to the lowest portion of an area where there may be a demand zone, and it'll take your trade going back up. But you got to be mindful as the market is retracing back to a zone. Take a look at price action, okay? We got a swing, pullback, break a structure right here coming down, tapping that zone. This is a nice swing right here. This is a structure, area structure right here. So the market, if it rejects here, it can go back and test this supply area right here, or this area, supply right here, okay? Just think about it like that. Then the market comes down. What does it do at this point here? Remember, this was a major low. It wicks below that. It takes that low out, okay? So then it may pull back to some key area, reject that. Like, for example, it wicked right below, above these, this small high right here, and came back lower, right? Why? Because we got a structure break right here. This is a major low. This is a major high. So again, determine your major lows and major highs. So let's say we keep moving to the downside. This is your major low right here, right? The market did, and keep, be mindful of what took place. major low, major high, came down, broke below the major low right here, right? So if we break structure lower, all right, we can look for something on a pullback to go, we look for a short. Look and see what happened. The market can continue pushing higher. That's, again, a major high right here, okay? So if it pushes up, pulls back, and takes out a swing high, what do you have then? You have a structure break to the upside. The market has now shifted direction. Now you have your new major low right here and your major high resting right here. Again, major high, major low. Wait for the market to take something out, meaning when it starts coming back down and you have a hard time trading or looking for an opportunity to go long or short, wherever it may be, wait for it to take out either the major low or a major high, okay? If it comes down here and takes out this major low, then look for pullback to go short. If it comes up here and takes out the major high, then pushes up, look for a pullback to go long, okay? So if you're having a hard time, all right, okay, and you're only, the biggest thing about looking for quality setups is look for an area where the market has created nice structure, okay? So like, for example, like right here, this is a low. It pushed up, pull back, lower, it's creating small little higher highs as it goes higher. So it's creating a bit of structure going to the upside, okay? And taking out some structure to the left. So if it's coming down or taking out some lows, and it took out this major high right here, right? So if it's coming down and it breaks a low, right, then you can look for a pullback for it to go, like it came down right here, pullback to go short, right? Okay, so then if it goes back up and it takes out a major high back to the upside, okay, then it starts to make higher highs, higher lows, higher highs, higher lows, pushing to the upside. What are we doing? We're creating a bit of structure, right? We're taking out a major high here, okay? Got a new major high. We got a major low right here. We created some structure going back to the upside, meaning making some higher highs and higher lows, okay? Multiple ones going to the upside. So we're creating structure to the upside. So you got to say, on this leg, we created structure, right? If we come down and break below this area here, meaning break below structure here, take out a major low, that is a beautiful area structure, which takes out a major low, which I would be interested in taking a pullback to go short. On the reverse, if it creating structure to the upside, pulling back here, now what does it do when it comes back here? Lows, lower highs. So it's making new lower lows and lower highs, okay, coming to the downside as it's moving lower. So this is basically a leg coming down, but then this is a major high right here. So we break again that major high, then we got a nice area for pullback to go long. So just be looking at the in-between parts of a leg. Is this a major, did this area here break structure come lower? If so, then you got a major low here. Did it break structure coming back to the upside? Yes. All right. Then we got a major high at the upside. So wait for the market to take out one of the extremes, the major low or major high, and look for your pullback to go long. Like right here, when it pushed up here, it came back. It broke above this major high right here. This is a beautiful area right here of demand right here. Demand. Why? We broke structure above these highs right here, okay, and came back. Yes, it rejected right here, okay, but again, and that is still a valid demand zone, but you also got to pay attention to price action. So if this was the fib, I'm not trading the fibs, I'm just showing you 50% area of this leg to the upside, major low, major high, breaking major structure here, coming down, right? All right, so pay attention. As the market is making lows, lower highs, small little lower lows and lower highs coming to the downside, it rejects this area. You got to understand the market can react right here, okay? This is a small little area where the market, a little swing to the downside right here, where it can come back. It's probably going to test right here at 56.27, right? If they get the rejection right here, you can still take that trade. And I would mark this up here, okay? I'm going to show you, mark it up. I'll go down to my 12 range chart at that point there. Remember what I said about the zone within the zone? Market comes down, broke structure to the upside, major low, major high, coming back. This is the 50% area. Well, slightly below that. We're getting close. Actually, this is right around the 61.8%. Okay, so we're getting closer to an area where I'll be interested in trading. But keep in mind as well that there are, still gaps coming back to the downside right here, to this zone right here. This is another valid zone right here. I'm going to mark it up right here. Valid zone right here. Okay, you can have multiple zones within a leg where the market broke structure. This would be the most appetizing and the most valid opportunity. Why? Because this is the origination point that with everything started with aggressive selling to the upside that broke above this high right here. All right, but there's aggressive, if I said sell, I'm sorry, aggressive buying. Aggressive buying as well as right here, okay? Back down to this demand zone here. The market reacts. but you got to pay attention. I always said, okay, you can mark the zone up, right? Once you got the zone marked up, you just don't want to jump into a trade. We got the higher base chart marked up. We go to our lower base chart. This is the larger zone, is the higher base zone off the 60 range. On the 12 range chart, we're on 12 range. Start to look and see, is there a demand zone resting on the inside of the larger demand 60 range demand zone right here. Aggressive buying. Broke a swing right here. Broke structure going back to the upside, right? All right. So I'd mark that zone right there for a valid opportunity to go long. But you got to pay attention. Remember what I said? Before you take a trade, look at above you on your higher base chart just as well to see what does price action look like, to see are there swings where the market can stop. If this was a straight shot coming down with all red candles, say for example, all bearish activity right back down to the demand zone here, then more than likely the market's going to come back, push back up, and probably test this area back up here at 56, 58 and 3/4 or 56, 59. Okay, back up there. But we got some price action activity coming back to the zone. So once the market rejects off the 60 and the 12, okay, demand zones, then more likely it's going to reject right here. It's going to at least stop there. Okay, and it does. Comes on back down, checks this zone here. We got to pay attention to price action back down below us as well. I'd be interested in taking the trade back up to this area here. Rejection here. You could go down once you mark the zone up here on your 12 range, excuse me, on your 60 range chart. Go down to your 12 range, find your 12 range demand zone resting on the inside of the 60 range zone right here. Okay, again, this is a high probability zone because we have an imbalance resting back at it, and it's putting us close back down here to 76.4%, almost at the 100% where the move started at. This was what makes sense in the market push higher. So imagine catching this trade right here, somewhere maybe around here, maybe 56 or 57, and taking it back up here to say 92, 93 area. You'd be done. You have one night. You may not trade for maybe for 2 days. Okay, just depending. I'm just saying. But a 20-point move or more on the ES is very nice. Or 30 points. If you catch 30 points on that, you don't have to trade. You're done for the day. Maybe the second day. But I'm showing you how you can make like $2,000 a week, $400 a day if you're trading and doing this 5 days a week, guys. Now on the day today on the Nasdaq, I'm going to break this down for all my elite channel supporters and maybe those that are interested in maybe joining. I'm going to be breaking down the trade that I took today, and as well let you know some other areas where you could take in some entries at. So, and maybe some of you guys probably took these entries as well. So I took a trade right up in this area here today, back up to around this area here. Excuse me, and I'll be breaking down the market from what I, in regards to what I saw taking place today. So if you are an elite channel supporter, I'll be breaking the trade down today. Look for that on the private community. To anyone that's interested in joining the elite channel supporter group, it's only $6.99 a month. And what you get with that are the tons of trade breakdown videos. These are trades that I posted over on our Discord community. The Discord is free. If you scroll down right now to the description portion of the video, you'll find 2 links. The first one, the Discord, is free. The second one is the Elite Channel Supporter link. And if you choose to become one, click that. The second tier is the one you want to sign up for. It's $6.99. You get all the trade breakdown videos to walk you through setup after setup after setup. And there are tons of those videos on there talking about what was going on with structure, talking about where to place your profit target, talking about where to place your stop at. Just talking about everything in regards to the trades that I take so you can end up looking for a similar type setups just like this. But the number one thing you need to master is market structure. You've got to conquer that concept. Okay, I'm telling you this for a real. When I say this, I don't know how to beat it to death any further or stress it anymore. You have really got to understand how to read the markets. If you think you know, trust me, because I thought I knew, and then I quickly found out that I didn't, and I had to start over from the beginning because I was failing to be able to read the market the way what was going on and showing me. Okay, what was going on in the charts. Okay, all right. People just want to take, oh, that's a nice demand setup. Oh, that's a nice supply setup. I see it all the time, especially on our Discord. Look, guys, take quality setups. Look at the bigger picture. Look at your higher base charts. They're going to tell you which direction we're moving. Like right here, this was a counter trend setup right here. But the overall direction of the market is bullish. Okay, so please take some time to be able to read what's going on in the bigger picture, or you're going to get chopped up. You're going to get stopped. You're going to lose money in this business. Okay, again, the elite channel supporter link is down in the description portion of the video. Choose the second tier when you click on that for $6.99. You get all the trade breakdown videos, the video playlist, and a great video I covered surrounding market structure just as well. We're talking about pennies on a dollar on a day, that it could be something that could be life-changing for anyone that could, is possibly looking to want to start trading futures, all right? I can't make any guarantees, I'm telling you right now, because the fact is that you may not see it the same way I see it, all right? You may see it better than I see it. I don't catch everything, but I'm showing you the inside of my world and how I look at the markets and how I personally trade, and sharing my trading strategy with you, okay? If it doesn't work, okay, then just move on, okay? You haven't, and not have much invested in anything, because I'm not sitting here trying to charge people hundreds and thousands of dollars for a training course or mentorship. I'm just here to share with you how I do it, and that's simply it, all right? Nothing lost, okay? But outside that, I appreciate you guys for tuning in each and every day and watching the video content. If you're not a current subscriber, please take the time to go ahead and sub by clicking on that subscribe button right now. Make sure to turn the post notifications on so you do not miss one of the uploads here. All you got uploads here on the channel. All you have to do is click on that bell, okay? Last but not least, before you click off the video, make sure to click the thumbs up button, that like button. If I share something with you that kind of resonate, or maybe something clicked, or you say that, hey, this seems too easy. Yes, it really is easy. If you can master market structure, the strategy is the easiest part. I'm gonna tell you that now. All right. So trading it can be hard, but it can also be simple. It comes with experience down the road, is where things kind of start getting a little bit lighter. Okay, it doesn't feel as much heavy on your back, to where you are able to really see things more clear. So that's why I'm trying. That's why I'm here. I break down things as much as I can. All right, from an elementary standpoint, I can't help everybody, because not everybody is going to catch this or see this, and we have to think about in terms of just reality. Not everybody is designed to be able to do this stuff. Okay. We are all designed for a purpose or reason. Some of us can see things and do things better than other people. Whatever the case is, I'm not a pro basketball player, or I'm not an astronaut, and I don't claim to be one, But the thing about it is that we have to develop our own skill set and things, and find out what we're good at, and hone in on that craft and make the best of it. Not everybody's cut out for this. I'm just going to say it like that and be honest with you, okay? And you have to find out sooner than later, because if not, and you start throwing a bunch of money into this business, you're going to start losing money that you cannot afford to lose. I'm telling you that. Trust me, all right? Outside of that, that's all I have for you guys today. But look, please click that like button if you found some value in today's video. Take care and see you in the next one.